Hello all, a warm welcome to my channel. History repeat itself is actually true, but it takes time. So it's always better to understand the history of everything you do. This video will explain about the history of the stock market. Understand this better so that you can invest better. The stock market has been a driving force in the global economy for over a century. It has facilitated the exchange of capital, enabling investors to purchase shares of companies and reap profits from their growth. The stock market has a rich history, shaped by economic conditions, technology, and regulatory changes. Understanding this history is essential to comprehend the stock market's current state and its potential future. From the formation of the New York Stock Exchange to the dot-com boom to the 2008 financial crisis and the current COVID-19 pandemic, the stock market has weathered significant crises and adapted to new realities. This video will delve into a century of stock market history, exploring the key events, trends, and challenges that have shaped this critical aspect of the global economy. The stock market has been a significant factor in the global economy for over a century. It has facilitated the exchange of capital, enabling investors to purchase shares of companies and reap profits from the growth of the company. Over time, the stock market has evolved, with new technologies, regulations, and economic conditions shaping its trajectory. The early 1900s saw the formation of the New York Stock Exchange, NYSE, which became the primary stock exchange in the United States. During this time, the stock market experienced significant volatility, with investors speculating on stocks and driving up prices. The Roaring Twenties saw a boom in the stock market, with many investors buying on margin, meaning they borrowed money to buy shares. This led to a massive stock market crash in 1929, which triggered the Great Depression. The 1930s saw a significant overhaul of the financial system, with new regulations and government interventions designed to prevent another stock market crash. The Securities and Exchange Commission, SEC, was established in 1934 to regulate the stock market, and the Glass-Steagall Act of 1933 separated commercial and investment banking. The post-World War II period saw a prolonged economic boom, with the stock market reaching new heights. The 1950s and 1960s saw the rise of large corporations, with the stock market becoming a key means of financing their growth. The 1970s saw significant economic turbulence, with inflation and energy crises causing stock market declines. The 1980s and 1990s saw the rise of new technologies and financial instruments, such as options and futures contracts, which enabled investors to speculate on the direction of the market. The 1980s also saw the emergence of the Nasdaq Stock Exchange, which became a key market for technology companies. The late 1990s saw a stock market bubble fueled by the dot-com boom, with many investors speculating on technology stocks. This bubble burst in 2000, causing a significant decline in the stock market. The early 2000s saw the rise of new financial scandals, such as the Enron scandal, which led to increased regulation and oversight of the stock market. The 2008 financial crisis was a significant event in stock market history. It was triggered by the collapse of the housing market and the failure of many financial institutions. The crisis led to a significant decline in the stock market, with many investors losing significant amounts of money. Since the financial crisis, the stock market has experienced a period of significant growth, with many companies reaching new heights. However, the COVID-19 pandemic has caused significant economic turbulence, with the stock market experiencing significant declines in early 2020. Here are the main points for the conclusion of the essay on a century of stock market history. 1. The stock market has been a significant factor in the global economy for over a century. 2. It has experienced significant volatility, crises, and adaptation throughout its history. 3. Key events that shaped the stock market include the formation of the NYSE, the Great Depression, the post-World War II boom, the rise of new technologies and financial instruments, and the 2008 financial crisis. 4. The COVID-19 pandemic has caused significant economic turbulence in the stock market. 5. While the stock market has driven economic growth, it also poses significant volatility and risk. 6. Continued monitoring and regulation of the stock market is essential for its stability and reliability in the future. Thank you for watching the video. Learn daily, grow daily.